Good afternoon, everybody. This is Mark. We're back here for the afternoon call, and it is Tuesday, and it seems like the bid continues in this market. I've been talking about that for a little while. It seems like indecision has certainly been there. The fiscal cliff has been in the air. We seem to be getting closer to some resolution, but it doesn't matter because there was rotation that was going on. There was leadership that's been happening. And quite frankly, yesterday and today were the 2 days that you just saw it in these charts, the flush that people are going to miss it, afraid to miss it right before end of year. And you could just start off with the banks. I mean, I'll put up the spiders and the Qs and the IWMs for a second. You can see we're basically out of that range, and it looks like we could test new highs right at the end of the year. I'm not sure if that's going to be the case, and also, when we actually solve the fiscal cliff, and if it does it before the end of the year, that could be the sell the news also, knowing we are rallying up to it. But we'll have to wait and see what happens, at least temporarily. Q, same thing. Look good, not as pretty as the spiders, I would say, but the spiders have the banks. That's really what it comes down to. High beta is still lagging a little bit, starting to play catch up here and there. And then the IWMs, pretty good. Russell 2000, decent looking chart, almost more like the spiders. So stock-wise, I haven't seen a move like this in the banks in so long, and you could credit it that they're already. You can credit that Meredith Whitney, got very bullish on, the banks. Either way, we've been talking about BAC. I know Scott, I'll give Scott credit, around $10. We've been talking about it. We were involved. And then there was rotation, Citi and Bank of America the same day moved up. We were involved with it. I'm still involved with it. Then you had Goldman, which I've been talking about now for a better part of 2 weeks, that really wasn't participating in this move. Low end of the range was 115, high end of the range was 120.50, 121-ish would have been the trigger buy. Ended up buying it, and I was talking about on the VTF, so that's one of the reasons why you should be paying attention to that. And it's not just necessarily momentum trades. We get involved at levels. And we were looking at around 117, maybe 116.50, 117-ish. And held for a few days and then added above 121, which was yesterday. Followed through 121, big percentage move for that stock. I haven't seen that in a while. I actually took a majority of my trade off. Good, bad, and different. Doesn't seem like it's going to go higher, longer term, yes, but it's from a trading perspective, and that's what I do. That was a big enough percentage move for me to take a lot of the banks off, minimum reduce risk, and let these things digest a little bit. They've had 2 or 3 good moves. Big buying came in, decent volume. They got to digest here a little bit. But either way, that shows leadership in this tape. That's impressive, and that's healthy to see. That's really where the money's been the last few days, the banks. Now, high beta. Basically, we know Apple's sort of been taking a break, woke up yesterday after a pre-market low below 500 and, gapped up a little bit, back to 535. It seems like 550's in the cards for the stock. It's still lagging. It's still a little lackluster, but overall, it's trying to find some consolidation. And maybe it's an ascending channel that's going to work itself, or descending channel that's going to work itself to the upside. We'll have to wait and see. Still not there yet, but you can just see. I'll put it up there so you can see what I'm talking about. You can see this channel right here. No, that's not doing it. Oh, not working for some reason. Oh, here it goes. I don't know. Not working. A descending channel starting to be formed, and I think above 550 will break it out the first time around. It should fail. So keep it on the radar. Google, we were talking about yesterday, had some, basically a good trading stock and acted well. Had a little rest today, and I think that's due. Anywhere around 710, I still think it's buyable, but stocks need to break, need to base. Amazon had that trigger today. Did it so quickly, and I was kidding myself because I wasn't long overnight. Bought a little bit in the AM above the 256 level. Went almost to 260 immediately. Hit 262 today. Basically hovered at the top end of its trading range. I was saying I was avoiding the stock for an extended period of time, almost this entire move, because I didn't trust it and how it was going up. It was just a little loose for me. After this base, gave me some conviction. Obviously got back involved today. That's what you want to see. You want to play to your strengths. You want to play with where you feel comfortable. It's not what I feel like. It's not what Scott feels like. It's what you feel. comfortable doing, and hopefully we can give you the conviction on what we're thinking, and then you back in, the size and your own research. So Amazon still looks good. A few other individual notables, I guess, today. Qualcomm had a nice little bounce from that I guess not necessarily downgrade, but from the Apple components. Qualcomm looks okay. Didn't really trade it a whole lot today. Netflix seems to be grinding higher. Seems like the 100 mark is in the cards, especially that it's heavily shorted. GMCR might give you, I was talking about buying it at 37.50 a few days ago. Might give you another trade though, another day or two of basing up here. Maybe it doesn't even wait. It looks good, and it looks like there's some more room in it. And it's just a matter of where you want to be. And that's the key. I'm not talking about, I can mention a bunch of the oil stocks. Chevron, I think, still looks good, closed pretty healthy. Key moving averages were crossing. Exxon looks okay. Schlumberger looks okay. But PXD, EOG, just to name a few, EOG is actually one of the better looking charts I've seen. But you really got to, it's very hard to spread yourself out. I mean, if you guys are looking at the VTF, I am a little spread out, and sometimes it gets me to the point where I see so many good looking charts, I really got to decipher what I want to be in, because once you start getting, there's a point of, diminished returns, and for every trader, you got to figure out what it is for yourself. But for me, once you get into 15 to 20 positions, it gets very difficult to manage, unless you obviously have a day like today where you just straight up, but that doesn't happen very often. So you got to be realistic in what you're looking for, and going from there. There's a bid underneath this tape. 3 days down in any of these stocks and any of the banks I'm going to be looking to buy. 3 days down in any stocks that have broken out over the last few days, I'm going to be looking to buy. I don't think anything has changed. If a fiscal cliff is happening, we'll have to see how the market reacts. If it is to sell the news, not sure that's going to be the case. But overall, this market still looks good. It's healthy. And I love the fact that, chasers are starting to chase. We've been involved. And the fact is, when you get this, 2-day big move up, 2-day 100-point move up, you got to take some risk off. It's not the time to put a whole lot of new risk on. You can go into stocks that, quite frankly, are just breaking out day one, but you can't be in a stock 3-4 days up into this tape and expect to just get another 4 or 5 days. The laws of averages start to go against you. And you just got to, again, it's all about risk versus reward from a trading perspective. So overall, guys, this market looks healthy. We're still waiting for some resolution on the fiscal cliff. Lots of things look good. I know another high beta price line looked decent today. A few other biotechs I mentioned a bunch. Jazz closed over 42 for the first time in a while. I like that. It triggered for me to get back in today. ALXN, wasn't in. Looks okay. Looks like it's waking up. Possibly move to 103. We're finding ideas, and it's just a matter of, some of them are the big caps. Some of them, quite frankly, are stuff that we don't on everybody's radar. I was talking about a trade yesterday, Under Armour, and the only reason technically it doesn't look so good, except the fact that I knew 45 was some support, and I've been trading the stock pretty consistently for the last few months. And yesterday gave you that buy point, and now it's recovering. Maybe it's going to get some back and fill here. But the only way you're going to take advantage of some of these trades and some of these movements is if you do your homework, you understand your stock and the characteristics of how it trades. Just jumping into a momentum trade, i.e. such a Goldman at 121, it's going to make you money today. It's going to make you money hopefully tomorrow in a good tape. But overall, it's not a winning strategy that's going to just pound you in and keep making you consistent returns. You got to be a little bit more. It's got to be a little more thought-provoking, and that's the key for trading overall. And that's obviously a little bit more lessons, but I just want to let people know that. And that's about it, guys. Things look good. We'll have to wait and see what happens. I've definitely trimmed some of the longs at 2-3 days up, and I'm taking some risk off. But overall, I'm just rotating into different stocks, and I think that's where we're going to be till year end. And you just got to really be on top of it and make sure you do your homework. Hopefully, y'all had a good day, and I'll see y'all tomorrow.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we'd like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.